Hello and a warm welcome to this edition of Money Manager. I'm Gugulethu Cele. Today we speak to Eugene Visagie, who's the head of Hedge Fund Investments at Novara. Now this comes on the back of the institution's annual survey on the South African hedge fund industry. Eugene, good to have you with us today from our Cape Town studios. Maybe if we get a quick overview of the hedge fund survey, especially given the environment in South Africa where it's often received a bad rap from investors.
Thanks, Gugulethu. Yeah, I think it's a very exciting time for hedge funds, specifically because we're on the brink of implementing regulation around these funds. So we've been producing the survey for the last 12 years, and there has been some growth in the industry, standing at approximately 62 billion rand now, but foreseeing a lot more opportunities with this regulation and specifically addressing some of those concerns around the bad rep that hedge funds normally have.
Let's pick up on that regulation. I understand will fall now under the collective investment schemes regulation, which will be regulated by the FSB. But overall, the benefits that this will have for the investor, what do they entail?
Well, the well-known Collective Investment Scheme Securities Control Act, which currently already encompass unit trusts, will also then have separate syllabus specifically looking at hedge funds. Some of the benefits that there will be for investors into these funds are additional independent oversight into these portfolios. So not only would independent trustees be required or administrators, but the portfolios would also be regulated by the Financial Service Board, streamlining the whole process to the well-known unit trust environment. Aside from that, there will also be stricter limits on certain exposures that's taken within the portfolios, and also the regulatory reporting to the Financial Service Board will increase to assist with monitoring these portfolios. Again, just giving that additional oversight and additional comfort for investors into these portfolios.
In comparison to our international counterparts, how do we fare when it comes to the regulation and the overall hedge fund industry in South Africa?
The South African industry has lagged some of its international peers despite showing very strong returns over the since inception of the industry actually. But there has been subsequent measures placed to assist with gaining assets. The well-known UCITS structure that's in the European market has been very successful in gaining assets. So we're very optimistic that the new regulatory environment will also support the South African environment. That said, though, even with the current volatility observed in the local financial markets, there's very few opportunities left, specifically for institutional investors to meet specific target liabilities in their portfolios.
Speaking of the regulation, I understand that this also opens up an opportunity for retail investors to get involved in hedge funds, which is expected to take place early next year.
One of the biggest benefits of this regulation is historically hedge funds in the South African environment, because they weren't regulated, we were not allowed to market any of the funds. Going forward, there will be two distinct classes of hedge funds: a retail investor hedge fund, which you would just prescribed, and then a qualified investor hedge fund, which will encompass all the hedge funds as it has operated historically. This new retail investor hedge fund will have additional risk management oversight and limits imposed to the investment manager, and as mentioned, would also have additional oversight in the form of trustees and the FSB. These funds will also be accessible to the general public, since it will be allowed to market, and the minimum requirements that were allowed in the past would be a lot less. So opening up a whole new opportunity set for the managers of these hedge fund portfolios to access these the retail market.
Having said that, have you got a brief idea maybe of how competitively priced these retail offerings might be, Eugene?
That's always an interesting question, and with additional oversight and additional monitoring, there's always additional costs involved as well. As mentioned, the well-known unit trust environment has been operating in this regulated Cisco environment, and a lot of those costs will also be applicable specifically to the operational and risk management side. But I'm fairly confident that these products will be very similarly priced as some of the current unit trusts. Again, there is this misnomer that hedge funds charge enormous fees, and that's definitely not the case in the South African environment. Will we see some pressure on fees going forward? Probably, but that is a whole industry situation, and all the financial service providers are facing that risk.
Well, you've given us a brief overview of what the future could look like when it comes to hedge funds, but I understand the performance for this year has been phenomenal. A 15.8% increase in the amount of assets under management when it comes to the hedge fund industry in South Africa. Give us a sense, Eugene, of the increase in inflows as well as the performance so far in larger asset allocation base of hedge funds in South Africa.
Sure, Gugu. So yes, from last year, the assets grew from approximately 52 to approximately 62 billion rand. And on the back of that, it was very strong results from most of the South African domiciled hedge fund managers, delivering between 10 and 15% during this time frame. So we've seen very little outflows out of the South African market, but there's definitely been increased inflows and small allocations to that. I do personally believe that the regulation will even open the floodgates more. That said, though, due to the increased volatility in the market environment over the reporting period from June 2014 to June 2015, the all-share index delivering a marginal uptick compared to some of those equity funds that deliver over 15%. So definitely picking up momentum compared to the previous 5 to 6 years. From 2008 to 2009, there was a bit of a slowdown to allocations, but again, specifically in the current market environment, which is a lot more conducive to these sorts of strategies.
I want us to explore the strategy theme as well, because it's evident that most participants also outperform the local equities and bond market space. Does this have a lot to do with the kind of equity strategy rather that was approached?
That's a very good question. The South African hedge fund market is still relatively vanilla or plain, as some people might put it, predominantly investing in equity instruments and fixed income instruments. This is dual-fold, though, due to capital controls and most of the assets remaining in the South African market. We do not have these exotic sorts of option structures which was observed specifically offshore, and again, just adding to the bad rep that hedge funds in general have received. So the bulk of the assets locally sits in equity long-short strategies. These managers invest into normal equities. They just have different tools of extracting alpha from the market. The second largest portion is fixed interest hedge fund managers. Again, just invest in the normal, well-known fixed income instruments, just have different methods of extracting alpha from the market. So again, just illustrating that the bulk of this assets and strategies invest in well-known stocks, fixed income instruments, listed instruments, just different methods of implementing their views in the portfolios.
Having said that, how much of an influence do the greater global themes like the US Fed and the approach to interest rates, as well as Chinese slowing down in economic growth and the slump in commodity prices, how much of a role do those factors play when it comes to making these investment decisions within the strategy?
Most of those factors that you just mentioned were negative factors to both the local and the global economy. And with South African being so integrated with the international economy, hedge fund managers actually see a lot of opportunity from some of those factors. Specifically, a good example is the declining commodity price. A hedge fund manager could potentially take a short position on a commodity such as gold or platinum and then add positive alpha to their overall portfolio. So all of those factors can contribute to additional opportunities for these local hedge fund managers to implement in their portfolios.
So clearly there's an opportunity then for everyone in the market to make a substantial return. I want to come back though, Eugene, to the ranking of the Novara hedge funds survey, and I understand that it ranks quite favorably in comparison to its international counterparts.
That's a first, but that's always a good thing to hear. I think it's just because we've been so consistent in doing the report for the local and both the international industry. The local South African hedge fund market is relatively small, and we can comfortably say that we interact with the bulk of the managers that manage assets in such a manner. Again, just bringing it back to the regulation, it's also been very helpful to both the regulator to understand how the industry is compiled and to interact with different industry participants as well. So we would like to continue that report for both the local and the international market.
To all the naysayers with regard to hedge funds and those who are not as optimistic as you and your colleagues might be, if you had to say a few words to change their mind and investment approach to hedge funds, what would it be?
Hedge funds is definitely not black box investing. That's one of the general perceived ideas that investors have for these portfolios. But hedge fund managers, specifically in the South African market, invest into exactly the same instruments that a normal unit trust invests. So listed equity, listed bonds, again, just able to implement their ideas differently compared to specifically the traditional long-only asset managers. So it's just unfortunate in the past, people, as soon as they do not understand a strategy, they just throw it in with hedge funds. And just with a little bit of education, people will realize to understand that these are actually just normal listed instruments, just a different method of extracting alpha. So just a little bit of education, and that's one step that we're trying to assist in, is to show the general market, the retail market, and the qualified space, institutional space, that these portfolios have a very valuable value add in an overall portfolio to reduce the risk, but also to increase the returns in the portfolios.
Eugene, well, we certainly hope that you can bust some of those myths and that overall the education with regard to hedge funds in South Africa will be boosted. And it will be interesting to note as well in future if we could have a tax-free hedge fund investment opportunity for the retail investor. But we'll pick your brain on that in future. Thank you so much for your time today. That was Eugene Visagie, who's the head of Hedge Fund Investments at Novara, giving us his view of the 2015 survey that was conducted by the institution. Well, that's a wrap for Money Manager this evening. Do join us again next time.